Welcome to CHFA's video workshop. This session is designed for new Limited Equity Cooperative members and as a refresher for existing members. We will cover key topics such as legal and regulatory guidelines, financial management, reporting, and property management. We hope you find this information useful. If you have any questions after the workshop, please contact your executive committee or CHFA Asset Manager for assistance. A limited equity cooperative, also known as an LEC, is an ownership model in which an LEC member purchases a share of equity in the property. Members of LECs do not own their individual units or any part of the land or building. Being a member, you have an exclusive right to live in a specific unit established through a lease. The purpose of an LEC program is to provide an alternative to traditional rental housing by ensuring security of residency, continued affordable housing, and participation in the operation of housing. Because the property received funding from the state to create the LEC, it is subject to various compliance and reporting standards. It must adhere to Connecticut General Statutes, Section 8-214F, and state regulations, Section 8-214H-1 through 8-214H-20. CHFA is a regulatory agency where we have oversight of the LEC and work with the members to remain in compliance with the statutes and regulations. This is further supported by the State Housing Manual, which provides additional guidance and policy.
The structure and governance of your LEC is outlined in your declaration and bylaws. You should have been provided with a packet at move-in that has copies of the declaration, bylaws, mortgage note, house rules, and any specific policies your LEC might have. All members are encouraged to read these documents. The declaration is the legal document that outlines the structure of your LEC and is the foundation of how it should operate. It is an important document to understand. It talks about the boundaries of the units, the members' responsibility for maintaining the property, use restrictions, how members' equity is typically calculated, membership of the LEC, termination of the LEC, insurances, and common area expenses. Some declarations include responsibilities of the executive committee or board. Other key points define ownership structure, proprietary lease, governance details such as how it will be managed, member voting rights, board composition, and the decision-making process. The bylaws are the set of rules and regulations for your LEC and are important because they ensure everything runs legally and smoothly. The bylaws also establish who the members are, the frequency of meetings, voting requirements, along with the election of officers and the formation of committees. The board of directors are made up of all the members of the LEC and will vote annually on the officers who will form the executive committee. The executive committee is made up of a president, vice president, treasurer, and secretary. The primary role of the executive committee is to ensure the LEC is functioning well. They will manage the day-to-day operations, which include collecting monthly carrying charge fees, paying invoices, managing maintenance requests, and much more. They are responsible for maintaining monthly financial statements, which should be presented to the membership every month. This will be discussed in greater detail in Section 5, including the use of third-party property management. Together with the full membership, the executive committee is also responsible for the creation and occasional revisions of the LEC's house rules. The house rules are the guidelines that govern members' behaviors in relation to living in the LEC. They will cover topics such as how carrying charges are to be paid, parking, noise, pets, maintenance, etc. All members of the LEC have fiduciary responsibility for ensuring the success of the LEC. To accomplish this, the membership must work together to make good financial decisions to ensure long-term sustainability. The benefit of being in an LEC is that the members are the decision makers, and each member has a say in how the property is managed by voting on all major decisions, such as what the carrying charges are set at, the policies within the LEC, capital improvement projects, etc.
Legal and regulatory framework. LECs also have other governing documents such as assistance agreements, regulatory agreements, and, if applicable, loan agreements. These documents are specific to your LEC and are recorded documents. Let's talk about each one. Assistance agreement. This agreement is typically between the State of Connecticut and the nonprofit organization that created the LEC. It draws a picture of how the funds were secured to establish the physical building and how the funds were to be used for the initial renovations to the buildings. It also talks about financial reporting requirements to CHFA. Regulatory agreement. Depending on when the regulatory agreement was created, it could be between the State of Connecticut and the nonprofit organization that created the LEC, or it could be between CHFA and the LEC directly. This document explains that the members will manage the property appropriately, both financially and physically. This is one of the important documents that members of the LEC need to review and have a general understanding of. Loan agreement. If your LEC has a loan with CHFA, there will also be specific loan documents that are relevant: a mortgage deed and a promissory note. A mortgage deed is a legal document that outlines the terms of the mortgage. It includes the principal amount of the loan, the interest rate, and the repayment plan. The promissory note is similar to the deed, as it is the LEC's promise to repay the loan.
In this session, we will discuss equity, carrying charges, final reporting, and compliance requirement. Understanding equity. An incoming member typically pays $1,500 to become a member. This payment is called an equity payment. It is to be deposited into a separate interest-bearing bank account. Article 10 of your LEC declaration explains how equity is calculated when a member vacates their unit. Typically, the equity payment will increase each year by a percentage indicated in the declaration. The equity payment may earn interest for a maximum of 10 years. Each LEC declaration may be worded differently. Here an example of an equity calculation. Let's assume a member equity payment is $1,500. If the LEC has a 2% annual interest rate, the equity payment will be $1,656.12 after 5 years. Monthly carrying charge. Per state regulation, there are 3 ways to determine monthly carrying charge. The LEC may have an established carrying charge approved by CHFA in the early operating budget. 2, the LEC may charge an income-based carrying charge equal to a percentage of the adjusted gross income not to exceed 30% minus a utility allowance, or the LEC may charge the greater of the established carrying charge on an income-based carrying charge. Here an example of option 3, assuming the established carrying charge is $1,000. If 30% of the member adjusted income dictate that they can pay $1,200, the member will have a $1,200 carrying charge because $1,200 is greater than $1,000. Conversely, if the member adjusts gross income dictate that they can pay $800, the member will pay $1,000 because $1,000 is greater than $800. Compliance. In order to remain in compliance with state regulation, your legal document in CHFA, the LEC is required to submit an annual budget to CHFA for approval. It is due on October 31st, prior to the start of the next year. The current form can be downloaded from CHFA website. When the budget is submitted to CHFA, a signed signature page by the LEC president needs to be submitted as well. When creating the budget, the member must consider what the operating expense will be for the upcoming year and establish carrying charges at a level that is sufficient to sustain the operating expense as well as the subject deposit into replacement reserve. An important part of the budget process is ensuring that replacement reserve are funded at a minimum level of $425 per unit per year. This is to support the long-term maintenance and future capital expenditures. The membership vote to increase the carrying charges each year. When an increase is voted on, the following item needs to be included when submitted the budget for approval to CHFA. Copy of minutes, copy of the minutes when carrying charges were voted on, notice to increase sent to members, evidence of meetings when the members such as meeting signing sheet where the increase was voted on. Audited financial statement. An audited financial statement or AFS is required financial report that is due each year. The due date depends on what your legal documents say. In some cases, a less detailed report may be approved by CHFA. Whether the LEC is required to submit an AFS or other report, it is to be performed by a licensed CPA and uploaded to CHFA portal. Semi-annual financial reports are also required to be submitted for the second and the fourth quarter. For the quarters ending 6/30 and 12/31, the report are due 30 days after the end of the quarter. The semi-annual financial statement, including an operating statement and balance sheet, is to be completed on the form prescribed by CHFA and uploaded to CHFA portal. The form is part of the budget workbook. As a side note, there are 3 bank accounts that the LEC should have established. An operating account for which all the bills and invoices are to be paid from, operate the property. Carrying charges will be deposited into this account. An equity payment account where all members' equity payment will be held. This account is to be interest bearing and must not be used for operating expenses. Lastly, a replacement reserve account where the LEC must make monthly deposit according to the budget. This account should remain a $1,500 per unit minimum balance. For example, if the LEC has 10 units, the minimum balance in this account should be $15,000. Evidence of insurance. CHFA require the LEC to carry the proper level of insurance coverage. More information can be found on CHFA website. 2 accord forms are to be obtained from the insurance carrier agent and submitted to CHFA at renewal each year. Accord 25, Certificate of Liability Insurance. Accord 27, Evidence of Property Insurance. Income verification. Connecticut Statute Section 8-214H-11 indicate that income verification are due on May 1st. Members who pay an income-based carrying charge are required to undergo an annual income verification process, while those who pay an established carrying charge must complete their income verification at least every 2 years. The income verification workbook can be found on CHFA website. Income verification can be reported via immediate prior year tax return, 4 weeks of current pay stub or similar, Social Security annual determination letter, unemployment statement, and other documentation per the regulation. Tenant profile submission. The tenant profile submission or TPS report is due on November 1st each year. Include member demographic, which are included in the annual report for the legislature. An email reminder of the stats will be sent out each year, sometime in August or September. The email will contain a link to the LEC Secure SharePoint site. The site will contain the required TPS format. Further information can be found on CHFA website. Member directory. A member directory is to be submitted promptly after the LEC annual meeting where new officers are elected. It can be downloaded from the website. Any changes through the year shall allow the directory to be updated and submitted to CHFA. Non-compliance consequences. Failure to report to the item above will result in CHFA taking the following action. First, a notice of non-compliance will be issued. This notice will give you 30 days to come into compliance. If the 30 days pass and the LEC is not in compliance, CHFA will follow up with a declaration of default. If satisfactory arrangement to resolve the default noted are not made within the next 30 days, the authority may direct its legal counsel to pursue all available legal remedy to protect the authority's interest as well as the future of operation of the LEC.
Property management. Section 6 of the Declaration will generally provide information that outlines who is responsible for maintaining and repairing the interior of the apartment, which may include an agreed upon dollar amount, while the LEC will be obligated to maintain and repair all other parts of the building, such as the common areas or common elements. It's important that LEC is making sound business decisions about the buildings and grounds with good comprehensive maintenance programs that prevent high-cost emergency repairs. There are a few options for managing the property. Option 1. Self-manage. The elected executive board or committee complete the reporting requirements and manage the finances of the property as well as physical maintenance. Option 2. Property management company. Members may vote to enter into a contract with a licensed property management company. The management company will facilitate maintenance repairs, complete reporting requirements, and handle the property's finances. The members should meet with the management company monthly to review the finances and discuss maintenance or repairs for the property. CHFA can provide contact information for property management companies that manage other LECs in the portfolio that are familiar with the requirements. Option 3. Combination of 1 and 2. LECs may choose to have an accountant or a CPA complete the financial reports on their behalf, while the membership manages the physical maintenance. Ultimately, effective collaboration promotes a smoother running co-op where both operational and financial goals are achieved, ensuring the co-op's success and stability. As Kalisha explained previously, the Declaration outlines the recruitment and retention of new LEC members and provides information of the process by which an LEC brings in new members. It is important that all new LEC members have an orientation and be informed of the responsibilities of becoming an LEC member. At orientation or upon signing a lease, new members should be provided with the governing documents such as the bylaws, house rules, fully executed lease, declaration, and regulatory agreement so that they can be effective and informed members. In addition to member recruitment, the declaration will likely cover unit turnover. It is important that units are not left vacant for long periods of time, as lost revenue could have an adverse impact on the financial stability of the LEC. A member wishing to vacate from the co-op must make a good faith effort to find a new member acceptable to the LEC. If an LEC must advertise vacancy, they should have affirmative fair housing marketing plan. This document will give guidance to strategize how the LEC will target outreach to groups in the community and surrounding area that may be least likely to apply.
Section 6. Long-term sustainability. Earlier in this training video, my colleague Ramses spoke about the 3 ways LECs can determine their monthly carrying charge and how the carrying charge should be able to meet the operating expenses of the property. It's also important when looking at the budget for the upcoming year to make sure the LEC is setting their carrying charges at a rate that will allow them to put money aside into the replacement reserve account to help fund larger capital improvement projects such as roof replacement, replacement of heating systems, or hot water heaters. If your LEC doesn't currently have a capital needs assessment or CNA, the LEC should consider budgeting for one. The CNA will provide a capital improvement schedule for the next 15 to 20 years. It will also identify what the approximate cost is for all the capital improvement projects. If the LEC cannot afford to take on debt to address all the capital needs in one large transaction, then the executive committee should use the improvement schedule outlined in the CNA to create a capital improvement schedule and make sure the projects are budgeted for each year. The LEC should also consider setting aside money in contingency in the event the project costs come in higher than anticipated. Knowing the capital needs of your property and creating a plan to address them is essential to the long-term sustainability of your property.
Conclusion. As you can see from the information shared with you in this informational session, being a member of an LEC has its benefits along with its responsibilities. For the LEC to be successful, the membership must work in harmony. Effective communication is key. Meeting frequently is the best way to discuss the happenings around the property, as well as the very important review of the finances. It's imperative that each member has an understanding of how the finances work. Also, meetings are necessary to conduct the business of the LEC, such as voting on maintenance and/or repairs, etc. We thank you for taking your time to learn about the limited equity cooperatives. As we stated earlier, there are benefits to living in an LEC, but all the members must work together to make it successful. We hope you enjoy your day. Take good care.